If you remember one thing, never buy just the dividend. Ever, ever, ever. Ladies and gentlemen, boys and girls, welcome once again to this Dapper Dividends. Dapper Dividends. I'm going to leave that in. Extraordinaire, joined by Jeremy from dividendstockpile.com. And you may have seen him on X, and he has his own YouTube channel. So, Jeremy, welcome back to this wide, wonderful show we have here.
Thanks, Russ. Really appreciate it. Thanks for having me on.
You are most welcome, sir. So, we're going to talk about beginner dividend stocks. I thought it would be kind of cool to shift the focus towards somebody that's brand new to this. Maybe they've heard about dividend investing. Maybe we can share a few things that we learned, a couple tips, tricks, I don't know, hacks maybe. Jeremy, briefly, where are you from? How long have you been investing? What's the abbreviated journey of your investing experience look like?
So I live down in Florida, so nice and hot and humid down here. Been here pretty much my whole life, but I'm over in the Tampa area right now, which is on the West Coast. I've been investing for about 25 years now. So I've kind of seen it all and been through it all. You know, the dot-com crash, the 9/11 era, the great financial crisis, like I've seen it all, COVID, like I've been through it all at this point. And I've also tried a bunch of different investing styles. So, you know, it used to be mutual funds back in the day, and then it was trying to find individual stocks and ended up it was all crashing and burning. And then I was very hesitant, but eventually got into individual stock investing. And then that's when I started seeing dividends coming through. Started getting really interested in that about 7 or 8 years ago now. And once I kind of realized what dividend investing could do for me, I was all for it, 100% ready to go. Dividends are my one style right now.
I'm somewhat similar. I think I went a little bit faster than you. So 25 years, that is impressive. That's a lot of experience and knowledge you got, which is why dividendstockpile.com is so great, man. For myself, I'm a little bit over 6 years that I've been investing in individual things, individual stocks. Yeah, it went from penny stocks to trying to swing trade, and then I stumbled upon dividend investing, chased high yields instead of the profits, which is something maybe we can get into, and ended up mostly getting into dividend investing. I like total return now. Love looking at the total return. If you don't know what that is just all dividends, distributions, anything received, plus the stock price, hopefully appreciation, unrealized gain, they call it, if you haven't sold the stock and you're still holding on to it. But as we like to say, passive income is a hell of a drug. So, Jeremy, what appeals to you about passive income or dividend investing?
So the first thing that really appealed to me is the fact that because I've been through all this ups and downs in the market, I found that, with dividend investing, you never have to sell your companies. You never have to sell your shares. So you can build up your investments over time, and hopefully, when you're older and you need the money, you can just live off of the dividends as opposed to having to sell off the stocks. A lot of us here, buy over your lifetime, and then when you retire, you sell it off at a certain point to live off of. And I don't really want to do that. I have 4 kids. I have things I want for them in their life. So if I don't have to sell off my shares and I can just live off the income that the dividends produce, I can then give that money to them after I'm no longer here.
Yeah, it's funny. Have you read the book Die with Zero by Bill Perkins? How do you think about that? For those of you that don't know, if I could sum it up really quickly, is ideally you want to slide into the grave with a $0 net worth, spend it all on the people that while you're here. The idea being that you want to give your kids more experiences with you instead of more money after you're gone, which obviously we're both doing. So are they into dividend investing? Are they curious at all about what you do?
So my older 2 are teenagers, so they understand what it's about, and they have their own accounts, and they're picking their own dividend stocks. So they understand it. They don't really know that the money's going to be for them eventually. My 2 younger ones, they don't really know what it even is. So about the Die with Zero, I mean, that's a noble goal. Like, might as well spend your money while you're here. We make it a balance. We are able to provide those experiences and the fun things for our kids, going on the trips and things like that. But we also have the money set aside so that we don't have to worry about it when we're later on in life. And, hopefully there'll be some left over for when when we're no longer here. So that's kind of the whole thing. So I don't necessarily agree with the Die with Zero philosophy. I'd rather have money and pass it on. And if it's not for the kids, it can go to charity. I don't need to spend it all on myself. I don't need the fancy cars or 4 vacations a year. That's just not my style. So might as well, stockpile it. And that's kind of where where the name comes from. So
Clever. I love it. It's funny. I think of the Aztecs when Cortez and the Spanish conquistadors arrived. The Aztecs thought that they ruled the entire world. Like they just thought that they were the kings of the world. So they were just had their minds blown when the conquistadors came. So I think it's kind of good, even though you don't necessarily agree with it. It's just very good to be aware of as many investing philosophies and scenarios and things like that, because you always have to kind of challenge yourself. And as like I think Charlie Munger always talked about, trying to punch holes in his ideas and prove his ideas wrong, because if he could, then that meant he was closer to the truth and closer to being what's accurate. So with that being said, in philosophy, what are some of your philosophies around dividend investing? Or I guess we could just go right into, what do you look for? What's your philosophy about investing in passive income?
so my main philosophy is safety above all else and diversification. Those are really my two things. I want it to be where if a company stock does go poorly or I did make the wrong choice, that it's not going to blow up my account. And so I am under the mindset of more is better when it comes to holdings. I know a lot of people say don't have too many holdings, stay at 20 holdings or whatever like that. I would rather make sure that I'm safe and secure than gaining a little bit that I might get from being in a concentrated portfolio. So that's my main philosophy, if you will.
So you subscribe kind of to like Jason Fieber. I mean, the last time I looked at his portfolio had well over 100 individual holdings. Darth Dividend, fellow YouTuber. I always say, don't tell me what Darth owns. Tell me what he doesn't own.
Be a shorter list.
Yeah, but it is a interesting thing. And I guess, do you have any broad-based market index funds? Because with that, like if for those of you that may not know, the S&P 500, that's the 500 roughly largest companies in the United States. So you're diversified by putting your money into one thing. But as we see, the ones that are market cap weighted, which means the bigger the company gets, the more the money of every dollar that goes into each fund goes into those, like the Mag 7 everyone talks about. What's your opinion? Are you an ETF kind of guy or not?
Yeah, that's definitely my focus. So I would say the majority of my portfolios are in ETFs and in funds. I don't have any quote unquote index funds anymore or mutual funds. It's really just ETFs. So things like the QQQ or dividend favorite SCHD, things like that is where the majority of my money is. And then I have a couple dozen individual stocks between all of my different accounts. Definitely I like the diversification. I like the ease and safety of ETFs.
Yeah. So if somebody were starting out thinking, yeah, I'd like to buy some dividend stocks, what tips would you have? What are you looking for? What turns you off? What turns you on and what turns you off, kind of thing about a dividend stock. You see some sexy looking dividend stock over there and you want to investigate it. What's going to turn you on about it?
I would say for anyone who's just starting out, and if I was to start off again, I would absolutely 100% start with ETFs as my base. I know that's boring. I know that's not the cool thing to talk to your friends about on a Friday night or anything like that. But to build up the base of your portfolio, ETFs are the way to go. So to your point, a broad-based index fund or ETF like S&P 500 or the NASDAQ 100 or something like SCHD, where it gives you a broad, diversified base, is absolutely the way to go. And I would say that for some people, that's all you need. You don't have to go into individual stocks. So if you are just getting started and you're confused about what's out there or it seems overwhelming, stick with one or two ETFs and get yourself started. And then as you build your confidence level and you build your knowledge, then you can look into more individual stocks. But there's absolutely nothing wrong with starting with ETFs. When it comes to the quote unquote sexy dividend stocks, that's where I usually get burned. If something is a hot topic or the thing that everyone's talking about on X, it's usually assigned to probably stay away or at least put it on the watch list for a couple months to really make sure that it fits your risk tolerance, your profile, what you're looking to accomplish. Because there's hundreds, if not thousands, of dividend stocks you can pick from. And so if you chase every single one that you read about or every one that you see, either you'll have way too many holdings or you won't even know what you own at a certain point.
Yeah, very true. And man, it's so easy to get caught up. And believe me, I'm speaking from experience when I see high yields and I thought like, ooh, I got to have that high yield. But, and we could talk about this, but yeah, just real quick, going back to the ETFs, like I think J.L. Collins wrote Simple Path to Wealth, and we put in it. He talks about just putting everything into VTI or its sister mutual fund, VTSAX. If you ever see an X at the end of a stock ticker, it's a mutual fund. So that's something that's going to be in your 401k. And by the way, none of this is financial advice. We're just two guys talking, sharing some information and opinions, which last time I checked, we are not perfect. Do your own due diligence and obviously consult a financial advisor and all that good stuff. So VTI is the total U.S. stock market. There's almost 4,000 stocks last I checked in there. So you buy one ticker, money is spread across almost 4,000 businesses publicly traded in the United States. I think it's good, but I mean, if that's all that you have, like that's one thing that the FIRE community talks about, the financially independent, retired early, is putting all your money into one ticker, VTI. So do you see any problem with that? I mean, could that be suboptimal in a way?
Well, it depends on your goals and your needs of your account. If you're looking to just put the money aside, not touch it for 20, 30 years, just keep on contributing, and then when you retire, take 4% out of that portfolio every year to live off of, there's absolutely nothing wrong with that. It's a simple buy it once a week or once a month whenever you get paid and not think about it. You just keep doing it. You go and live your life, raise your kids, have fun, find a way to make more income. Like, you can do all the other things as opposed to sitting here in front of a computer researching individual stocks. So there's absolutely nothing wrong with that. It's definitely a style that the majority of people do end up doing, is they just put money aside and, withdraw it when they're retired. But, that's not for everyone. You do run the risk of the money not achieving what you wanted to achieve. Or when you go to retire, the market might be in a downturn and you're selling at a suboptimal time. So with dividend investing, you have the choice of selling, or you can just live off the dividends, and not have to ever sell your shares at a bad time.
Yeah, that for me, that's been a really big point, is not having to worry about selling shares to get money.
Mm-hmm.
And again, this is why, and we'll get into it, why you focus on companies that can comfortably pay a dividend and grow it, because man, the share price can keep going down, but that's not intrinsic value to a business. That's just the market telling you what they think it's worth. And the dividend for many companies, like a Procter and Gamble, I say, look in your bathroom, you're going to see that PG logo somewhere. It's funny. One more thing about Die with Zero is I agree, like the philosophy. I think some of the numbers can be a bit wonky, but he talks about time buckets. So thinking about what you want to do in your 30s and then 40s and then 50s, because as we get older, our bodies break down. Unfortunately, when you're 91 years old, Warren Buffett's age he's going to be 93 or 4, I think. He's not going to go hiking and backpacking around Europe. Not going to happen. So that would go in your younger years time bucket. And kind of the same thing can be with your I think, and I've heard people say, your investment portfolio is to time bucket it. So money that you need in the next, 5 years, you might want to be conservative with that. But if you need money that you're going to need in 20, 30 years, you might want to be a little more aggressive with that. Yeah, I know. But again, it's just, there's more than one way to financial heaven, right? With that being said, we'll shift into, my friend Ryan Williams is very fond of saying shifting gears. So shifting gears. What are some of the telltale signs of a company? Because I wanted to say stock, right? But when we're buying a stock, we're actually buying the business behind it. So I think, and back me up, I guess I'll speak for you, but when you're buying a company, you're buying a stock, you're buying the underlying business. So what are some of the, off the top of your head, low-hanging fruit of good dividend stocks, or dividend growth stocks even?
I would say if you have a long time frame before you need the money, when you're looking at dividend yields, I would probably stay under 3% if you have a long time frame. And the reason for that is the lower dividend yield means they're paying out, generally speaking, less money of their profits every year. And so they have more money to retain and grow the business. You want your companies to be growing. You want them to be expanding so that they can continue to pay that dividend 5 years from now, 10 years from now, 20 years from now. If they're paying out all their money to you as a shareholder today, how are they going to grow and how are they going to survive? So that's the first thing. And if you're a little bit shorter time frame, you can up your dividend yield, maybe the 4 to 6% range. Once you start getting over 6%, it definitely gets more risky. You would definitely have to do more research and make sure you understand truly what you're getting and why that dividend yield is so large. So that would be the first thing. And I would say for most companies, you don't want the dividend to be more than about 60 to 65% of their total profit every year. So that's a really good metric, is the payout ratio is what it's called. So if you're ever doing research on a stock, look for the payout ratio. For most dividend paying companies, 65% is probably where you need to stay under. if not much less than that.
Seeking Alpha is a place you can look for free and see the payout ratio. You'll see on the screen, if you click on dividends, there's a card and it will show you the payout ratio. I believe this is the earnings per share payout ratio though, and not the free cash flow payout ratio. This may be a little bit too advanced, but people like myself, I love looking at the free cash flow payout ratio because that's the dividend is paid out of the free cash flow. So where would you go to look at something like the business stability or maybe some of the financials or the fundamentals of a business? Do you have any content that you've put out or any content that you would recommend if somebody wanted to indeed get into more of the financials of the business and look at some of the accounting metrics?
I think when you're first researching a stock, when you're just trying to get a sense on what the business is about, I would keep it very high level. Resources like Yahoo Finance, Google Finance, any of those, they're going to give you the basics, the basic metrics, the basic financials, that type of thing, just to get a sense on what the company is all about. If you like what you see on the high level, then you can start digging into the more of the details. And so some of the apps and different websites I like, to your point, Seeking Alpha is a really good one at really digging into all the metrics of the business. You can also listen to their conference calls if you want to really get a sense on what the company's all about. There's a great app called Porter. You can listen to the earnings calls. You can look at the transcripts. You can do all that type of thing. But if you're really interested in a company and you're willing to put in the work, the best place to go is the investors relation page on the actual company you're looking for. So you can do any kind of Google search and Procter & Gamble investor relations, or Johnson & Johnson, whatever company, McDonald's. Always go to their website. That's where you're going to get all the details and all the specifics about the company. You're going to see the financials as they're required to report, but you're also going to get presentations that the company does to their shareholders to really explain what their business is, where their business is heading, what the management thinks are the biggest opportunities and also the biggest pitfalls of the industry that they're in. So the company is the perfect place to go if you're willing to dig in and get your hands dirty, if you will.
Yeah, and if not, just ETF. Buy an ETF.
Exactly.
You don't have to do anything. Some people are a little bit goofy. We enjoy this, I guess. Looking into the financials of the business. But hey, it might not be for everybody, but it's okay. There's a way. Like I tell my kids, I'm like, look, you don't have to like investing, but it's a fantastic way to grow and compound your money and build real wealth. And they have an easy button for you to do that too. Is just buy ETFs.
Yeah, absolutely. And you can always do a little bit of both too. You can do 90% of your investments into a broad ETF like we've been talking about. And then if there are a few companies that you really, really enjoy and you really want to follow, you can always add those on the side. Let's just say you're really into Apple products. You could buy a little bit of Apple as a small percentage of your portfolio. Microsoft, Costco, like whatever you're into, you can always do a little percentage, but it's not going to blow up your account if something happens with that particular company.
How about we get into a few beginner-friendly stocks that I think, why don't you? You're the guest, so share a few of yours and just a quick, brief explanation why you think they might be good for a beginner and somebody that's just kind of starting out and getting their. And maybe if you're an advanced, person and you're I don't know, you've been doing this a while, it could be an idea for you. So, what's some of yours?
Yeah, so going back to my philosophy of stability and safety, I have a couple names that I really think are, top of the tier, if you will, top tier type of companies that have been around a long time, have shown their ability to survive different market conditions. So the first one that I wanted to talk about was Pepsi. Everyone should know. Ticker is PEP if you're doing research. Obviously, they do the soft drinks, but they also have the snacks foods. And Russ, I know that Pepsi is or was a very big position of yours. And so I know you like it. The current yield is around 3%, and they grow that dividend around 6 to 7% a year. So it's a pretty good combo of current income plus the ongoing growth to beat inflation over time. One of the best things about Pepsi is they've been raising their dividend for 51 straight years. Talk about stability. All the turmoil that the economy has gone through and the markets and wars and everything else, and Pepsi keeps on providing more income to their investors. So I really like that one. I think it's very stable. I don't see Pepsi going anywhere anytime soon. People love their sodas, they love their snacks, and so that's one that I think you can be very confident, put in your account and not really have to worry about, oh my goodness, is next earnings going to drop the stock 20%, like some of these high-flying tech stocks you see today.
And because they've paid that dividend for 51 years, they are a dividend king when you hit 50 years. But I think you'll agree here, some people get a little too wrapped up in the names like 25 years of dividend raises as a dividend aristocrat, and they have to be a member of the S&P 500 too, I believe, right? And 50 years is a dividend king. But as we saw, some kings lose their crowns. Leggett and Platt,
Hmm.
not Walgreens.
Hmm.
I don't think Walgreens
I
did.
think they were I think they were aristocrat and they lost theirs.
Yeah, VF Corp, ticker VFC. They own Vans and Timberland. You got to remember, like, a dividend is not sacrosanct. It can be cut. So don't ever buy a stock saying, well, they've paid it for 51 years. They're going to pay it for another 51 years. It just doesn't work like that. So that's why we say never buy the dividend. You always have to buy the company that is paying the dividend, because if the company sucks, the dividend's going to get cut. So, hey, do you have a rule like if a stock you hold cuts the dividend, is that it? Are you out like Intel did?
Yeah, I would be out immediately. And because my focus is dividend income. I'm not investing for capital appreciation. Yes, it's nice when it comes, and I expect it to come over time. But my main goal and my purpose is to create income for myself. I'm looking to let my wife be able to quit her job if she wants earlier than traditional retirement. And so we're going to use our dividend income for that. So because that's my primary focus, if that company is no longer paying a dividend, what's the point?
And that's the thing too. If a company is cutting the dividend, like quality companies that pay the growing dividend, the stock price is going to appreciate. Why? Because they're a good business. They're going to keep growing earnings, growing the intrinsic value of the business. They're going to be worth more. Companies that, especially when it's a managerial decision, cut the dividend, like that's one of my new rules too. Like I'm out. I always wait. I hang around like, oh, they'll turn it around. I delude myself into believing it. And then I'm like, what am I doing? Like, why am I holding this thing? Like, this isn't what I invested for. So that's interesting thing to know about. Just never buy, can't stress that enough. Do not ever buy a stock. If you remember one thing, never buy just the dividend, ever, ever, ever. So what's another one of yours after the wonderful PepsiCo?
Pepsi, yeah. So the next one I wanted to mention was Waste Management, WM, the trash company, if you will. Everyone jokes that it's such a trashy company, but yeah, they do landfills and trash collection and recycling and gas. From the trash, they use that gas to power things. But they've been raising their dividend for 20 years. They have a lower dividend yield right now, about 1.5%. But they typically grow at around 8% a year. And what's really great about Waste Management is the stock price or the value of the company has been going up over time as well. I average on the last 10 years is over 18% annualized return for Waste Management. So you get the income, you get the income raises over time, but you have also gotten great capital appreciation. So it's like your total package.
Who does your garbage?
Yeah, so we are actually run by the city, so we don't have an individual company.
Oh,
But
really?
yeah, Waste Management does like the businesses, so like the big dumpsters you see, they do that. But our individual services run by the city.
Yeah, we have Groot. I don't know. I don't know who owns Groot. I've always meant to look it up.
As humans, we love our garbage. We love to make garbage. So something like Waste Management is always going to be around because we have to put that stuff somewhere. So I might as well make some money off of it.
Trash is not going away. So unless that's one thing, I don't think we have to worry about AI disrupting and turning it away. So yeah, I love it, man. Trash
If
is
anything, it's going
cash.
to make more trash because all the computers and things like that, and eventually wear out, and they're going to have to recycle or get rid of those. So the last
Oh,
one,
that's right. That's right. Also, talk about growing. Waste Management just bought they just bought a business, didn't they? That does like medical waste.
oh, okay, I hadn't heard that.
They're even trying to expand into like medical waste, I believe. It's on the screen because I looked it up while I'm editing this. So, last one. What do you got?
Last one for the stability type of portfolio is a company called Next Era Energy, ticker's NEE. They are mostly a utility company based out of Florida here. They do, your traditional utilities for your houses and your business. But what I really like about Next Era Energy is they're the United States' largest producer of renewable energy. So they're really going hard on the solar energy and the wind energy because that's where the future is. And with the population blowing up here in Florida, there's going to constantly be more demand for power here in Florida. So they pay about 2.5% yield right now, and they grow that about 11% a year. So it's really good growth. They've been growing their dividend for 28 years, and the capital appreciation has been really good too. That total return has been over 15% a year for the last 10 years. So it's extremely stable, but still a growth company. You're going to get a good return, and there's a good future with that. So really like Next Era Energy as well. and that's one you're not going to have to worry about as well.
Talk about demand. I mean, it's amazing. I don't know how human beings survived without power. I don't know about your kids, but my kids, the older they've gotten, I say all they need to survive really is just apparently a chair and a wall outlet and a phone charger. It's like, that's all they need to live. But yeah, man, and especially with AI, there's just more energy demand, and it's there you go. I think that used to be also known as Florida Power and Gas or Power and Light.
Florida Power and Light. So that's one of their divisions. So that's the traditional utilities that they do. They also have the renewable side where you can have them build you out solar for your company, or you can just contract in. So you can say, I want to buy my power from renewable energy, and you can use those resources as well. So they do a little bit of both. Those would be my three. If you're just wanting something stable, consistent, that you don't really have to worry about, you can sleep at night. Those would be my choices today.
Yeah, and those cards you saw on the screen while Jeremy was talking are from Simply Safe Dividend, so it is a paid service. I enjoy it. A little pricey, but if you have a portfolio of under maybe 10K, I don't even know if I would bother with that. But I got a few out there too. I'll just throw mine really quick. I think Visa is a fantastic business. And by the way, they have no risk to loans because all they do is they process payments. Visa is fantastic. The bank is the one that deals with all the loaning the money out and all that. Visa is just, they're a duopoly. Them and MasterCard, kind of interchangeable. It's I know people get all wrapped up in a debate, but hey, Berkshire Hathaway and Warren Buffett own the both of them. And I've taken a page out of Warren's playbook. In the 1979 annual letter to shareholders, he was talking about they've kind of gotten cute and they look for the businesses that, this is a little bit pricey right now, but, we want to look at like a Wambeck Materials textile business. And it's just kind of thinking about Intel. Like he said, buying turnarounds, the problem with turnarounds is they often don't turn. But yeah, he said, despite a fancy price tag, the easy business may be the way to go. And I think companies like Visa are an easy business. So people may say it's a little bit expensive, but quality business, and if they keep growing their earnings year after year after year, stock price is going to follow. Do you own Visa? What are your thoughts on Visa?
Yeah, so we do own a little bit of Visa. It is a little bit lower yield than what we're looking for because we're a little farther in our journey. We're looking to use our dividend income quicker, if you will, in the next few years. We tend to go with the slightly higher yield companies. But, Visa is perfect. My 13-year-old has it in his account. So, it's going to do really well for him over the next 40 years or whatever. So, yeah, Visa is a great one.
Yeah, and as you see on the screen, they have an 18% 10-year CAGR on that dividend. So they grow it very fast. It's a very fast growing dividend stock. The next one I got is Procter & Gamble, ticker PG. This one, again, may be feeling a little bit expensive at almost $170 a share as of this recording, but it's one of those sleep well at night stocks. They are going to be able to pay that dividend for a long time. And they don't grow that dividend as fast as Visa. They have a 7% 20-year CAGR. It's kind of average growth. They raised the dividend 7% last, but they have paid an uninterrupted dividend for 134 years. And they have grown it for 68 years. So how is that for some dividend growth right there? What do you think about PG? I mean, you got to have some PG products in your house, right?
Oh, absolutely. They're all over the place, in the kitchen, in the bathroom, in the laundry room, they're everywhere. You go to Target, you go to Walmart, you go to your grocery store, all those products, you turn them over and I could guarantee like at least half of them are P&G type of products. It's amazing how many brands they've been able to develop over the years. And a lot of them are billion-dollar brands. And so they're just household staples and people are so used to using those products, their parents used it and their grandparents used it. So those brands are going to be around forever. So yeah, that's one you can absolutely put in your account and not have to worry about at all.
Oh, dude, I had to check when my kids were given to us when they were born. I had to check them for the P&G logo. Just had to make sure, it's creepy. It's like a Twilight Zone episode.
Yep.
And then the last one I got, talk about easy businesses. This one, I'd struggle with going along with Warren Buffett just paying up for a quality business is Costco, ticker COST. Now, the momentum on this one has been insane. As of this recording, it's up about 75%. It's nuts in the last 1 year. Momentum shifts, and momentum could shift the other way. Eventually it will, so I'm going to look for those buying opportunities to individually own Costco. But again, a super small yield, only 0.52%. Slightly smaller than Visa even, but they grow it very fast, 14% they last grew that dividend.
Another thing that's great about Costco is obviously, the demand for their warehouses is incredible. They open a new warehouse in Japan and there's a 5-hour wait. It's craziness. But one other thing they do on the dividend side is they do special dividends pretty regularly. So in addition to that small dividend yield you get today, there's opportunities where you get a $10 special dividend and a $12 special dividend. So those things really help out in the long run as well.
And as you see on the screen, the last one was December of 2023. It went ex-dividend, which, by the way, we didn't even talk. I think I'm going to have to come on your channel. We can talk about ex-dividend dates and stuff like that. But it was paid out January 12th of 2024, a $15 per share special dividend on Costco. Thinking about things, dude, we didn't even cover ex-dividend dates. We didn't cover some of the more in-depth payout ratios. We didn't talk about dividend yield theory. We've got so much that can be talked about. It's really hard there's no elevator pitch for this stuff. Some of the more nuanced, complex things, you kind of need what can you talk about over a dinner? Anyway.
You can say, obviously this was just an introduction to the idea of dividend investing. There's lots of videos out there and things we can do and, follow-ups. You can use this to kind of get your excitement going, something along those lines.
Yeah, and if you got any questions, I'll have Jeremy's link to X. He's very active on X. I should be more active on there, but you're very active on X, and you can always get a hold of him there. And dividendstockpile.com. You have your YouTube channel. I'll have those 3 links in the notes and the show description below. Dude, I guess I'm going to have to come on your channel and we'll talk some more philosophy, maybe get into some more of the numbers, whatever you want to talk about. Maybe you guys in the comments can leave some questions. What do you want to know for the next meeting we'll do over at Jeremy's place? Let us know in the comments below. And Jeremy, man, I'll thank you. I love it. Nice, short, sweet, easy. And what do you, I guess I told everything where can people reach you? What do you want to say that I'm not going to talk over you about?
Awesome. Just know that, dividend investing is a great strategy to use. If you embrace it, it can do wonders for you. As I said earlier in the video, my wife is looking to retire over the next couple of years, spend time with the kids, do what she wants to do, and not have the stress of working. And dividends are going to do that for us. So it's definitely a strategy that will work for a lot of people. You can find me mostly on X. I'm at Div Stockpile. And then on YouTube, I'm trying to build that up as well. So I have a couple dozen videos out there. I usually produce a new one once a week or so. Feel free to take a watch and make some comments. If you have any questions, I'm more than happy to help. I'm all about financial literacy and helping other people. So yeah, definitely reach out anytime.
Beautiful, man. Well said. And before we go, hey, since you made it to the end, there's a Labor Day sale. We talked about Seeking Alpha. You can see it on the screen is a Seeking Alpha Labor Day sale. You get 2 free picks, whatever. Use the affiliate link that I have below or don't. I'm going to be fine. And then because we talked about financial statements, I did a beginner video with you in mind. If you're a beginner, you can click that link. I'll tell you about it there and look for me on Jeremy's channel. And Jeremy, thank you again for stopping on by.
Thanks, Russ. Appreciate it.